Let's welcome in Hemindra Hazari now. Hemindra, you looked at the ICICI Bank numbers, you heard from the management commentary. You think markets is factoring in a lower slippage, a lower provisioning going ahead in FY18? That's why this 8% move?
No, it appears that the market is believing that the asset quality problems, at least on the corporate side for ICICI, are now over the hill. And therefore, from here on, you'll find probably lower corporate NPA slippages and therefore much lower provisioning. But I don't see how, that kind of outlook can continue to hold. Because on one hand, I really don't see any major resolution on any of the power sector assets. I really do not see any major recovery from some of the core NPAs, the corporate NPAs that are there in the system. And also another thing is that the retail NPAs today are extremely low. And the corporate, and the broad economic slowdown has continued despite these amazing levels of the stock market. So at some point in time, and I've been saying this, for about a year now, the retail loan portfolio also of the banks is going to show much higher NPAs. So there is going to be these issues. But as of this moment, and definitely as of today, there seems to be much euphoria about ICICI Bank.
Right. But in terms of ICICI, don't you think that it's a relief which is coming in? So it had become a favorite short. There is a lot of derivative positions which is open. They got caught by surprise?
No, possibly, because if you see the fundamentals of the earnings that they declared, it was not very good because profits were lower. Even the provisions that they took, they've practically exhausted their contingent and floating provisions. So there has been much pain, part of it which is visible, and part of which they've taken from their earlier contingent and floating provisions. So from a total standpoint of view, it is. Now, it's only from a technical point of view, probably there is this bounce back. But fundamentally, I really don't see a very significant improvement in ICICI Bank or in much of the other banks as well.
Right. In terms of, what's happening with the insurance arm, do you think markets is factoring in a higher insurance multiple as well? Or, growth over there after demonetization after the last 2 quarters? Maybe that's making the bank look cheaper on a SOTP basis. Is that also an argument to buy?
That is an argument to buy because during demonetization, I believe a lot of these life insurance companies had a field day in increasing their policies and premiums. But mind you, much of the private life insurance that you're seeing today is really a play on the stock market. They are really mutual funds disguised as life insurance companies. So as long as the stock market continues to do well, you will find that the ULIP product of the private sector life insurance companies will do well. So it is a direct correlation between the stock market and these private life insurance companies.
Right. We also yesterday had the cabinet meet where cabinet has approved, changes or, trying to resolve the entire NPA problem that was there at the end of December. Do you think that if there is a noticeable solution or, there is a haircut which is provided, the capital is provided, you think that could lead to a lot of changes into the banking system going ahead?
No, most definitely. If capital is to be provided, then much of your problems are over. But the real issue is that the government is extremely miserly about providing any capital to the government banking sector. So therefore, you really don't see any resolution. The government has also been extremely reluctant to chase after all these errant corporate borrowers who have siphoned off monies. Yet we expect that with some of these, ordinances, RBI coming into the picture, trying to facilitate various loan product structures, there is going to be a recovery. Now, most of these schemes which RBI had proposed, even under Governor Rajan, have all been failures. So I really don't see, and I'm not inspired by at all some of these measures. Until you have significant capital flowing into the government banking system and an overall government effort to go after these errant corporate borrowers, then only can I change my fundamental view on these banks.
Right. Measures have been taken. Some of them have not been successful. Some of them have. But at least there is a clear notice that something needs to be done. That itself is positive.
Well, I think that is obvious that something needs to be done, right? But what is to be done? I really don't see which measure has really been successful. You have 1 or 2 stray cases when there is some corporate restructuring going, like this JP Associates selling its cement division to Ultratech. So these are these one-off benefits which are there. But you need a much larger kind of NPA resolution. And the main issue is that there are huge losses on these bank books and they have to be provided for. And you require capital for that. So where is the capital? It cannot come out of thin air.
Right. In terms of NBFCs, especially housing finance companies, the numbers that they have declared, at least that section would continue to grow, you think?
Yes, the NBFCs and housing finance have had a very sterling run in the stock markets. You've seen their share prices do extremely well, and that is one segment which has continued, to grow despite the kind of slowdown that we've had. And retail loans is the only segment which is growing because overall banking credit growth is the lowest in many years now. So that sector appears to be, at least stable. But I think at some point of time there's going to be slowdown because I think, as all of us know, there's huge surplus inventory of unsold flats in metropolitan areas.
Right, but you think that housing finance, this unsold inventory, real estate not picking up has been happening for the last 6 years. But, housing finance companies have done well. So do you think there is sufficient demand for other houses as well or reused houses as well, which is taking these, which will lead to growth for these companies?
See, that's what it appears to be. But I've also always been puzzled by the fact that, mortgage loan growth in the banking industry is very high. And at the same time, we have this huge, unsold inventory of flats in metropolitan areas. And so the question is, where all is this loan growth happening? Because with such kind of, where the supply is excessive of demand, are these mortgage loans really going into buying, residential houses, or is it being diverted elsewhere? So that is something which, one has to be seen. Because to me, it does not somehow correlate with the kind of construction growth, the kind of surplus inventory that we see in metropolitan India.
Right. As far as microfinance companies are concerned, what will be your view? You think first hint of numbers not looking good has started in these companies?
See, that should have been straight away the case when demonetization was announced. And that has been, because most of their dealings was in cash. And once you've lost it, it takes a long time to recover that type of money and recover your capital. So there is going to be pain, and that is why, this Bharat Financial is now reportedly looking to be acquired by some bank. At one time, it was the poster boy of microfinance, even when it was revived for the second time, and suddenly see how the fortunes have turned.
Right, but say if Bharat Finance or any other microfinance company is acquired by a big bank, you think on the base of a big bank, these NPAs would look negligible?
Now, that is possible, but you see, it's very difficult to really scale up these type of microfinance activities on a major scale. They are nice in their little niches where they are, but the moment you try to scale up these operations, you're going to face considerable difficulties. So if you keep it small and nice, I think it can, go forward. But the moment you have major ambitions, expanding your base in microfinance, you seem to run into problems.
Right, but say if a bank acquires this company, will there be a lot of synergy benefits, costing benefits, reach benefit, the distribution business that they would be, cross-selling benefits that could come to them? Would there be benefits?
You see, again, cost, I wonder how you'll get lower costs, because the microfinance is a separate company and they have a much lower cost structure than what banks should have. So if you were to merge them with the bank, then automatically their employee staff conditions would have to be very similar to your own bank staff. I really don't see how you can keep it at a very different cost structure. So the costs, in my view, should go up if it is merged with the bank.
That's in the initial part, but they take funding from banks. So that would automatically now come from the capital of the bank.
Yes, but again, you see, when you're a bank, you have to be very careful for your reputational risk. What type of lending and what type of high yield loans you do. You cannot have the same flexibility that is given to microfinance companies, because the microfinance company is just an institutionalized money lender. Now, if banks also were to do that kind of activity, there is going to be concerns raised by the people, because after all, a banking license is not given just so that you can charge very high yields from the people and just, kind of do usury.
Right. What do you think, microfinance company valuation point out to? Do they still point out to big growth?
I really don't think so, because currently I don't think institutional investors are really very interested in, increasing their portfolios in microfinance, because there are problems, and that's why you're seeing these kind of distressed sales and companies wanting to be acquired by banks.
Right. Two particular banks I wanted to ask you about. One is DCB, one is Federal Bank. Are you impressed by the numbers over the last 4-6 quarters? Have they come out of the problems that they were earlier, or at least there are signs that they are coming out of problems?
Yes, it appears in the case of Federal at least that problems appear to be being overcome. But again, you have to grow your book very carefully in this environment because one, credit growth is hardly taking place. There are very few quality borrowers out there, both in the corporate space as well as the retail space. So in such times, it is better to go, at the industry growth or slightly even less than the industry growth. It is not a time for adventurism because as we've seen with some of these banks like Axis Bank, you run into problems at some point and then it really hits you.
Right, but these banks did have legacy issues, but now you get a sense at least the legacy issues are behind and the new way of lending or lending via CIBIL, some other credit bureaus would at least not be as bad as what it has been earlier.
So that is true. Now, because of the entry of CIBIL, at least retail loans and a lot of other loans, there is some rating possible. So banks are not going in really blind. So there are these things which have come in which definitely improve the quality of your retail loan portfolio. But again, you have to remember the macroeconomic situation, despite what the stock market levels are, is very poor today, and that is very clearly reflected in your type of credit growth, your IIP growth. So you have to be extremely careful of whom you're lending to.
But don't you think that's already happened with some of these banks?
Now, what has happened?
That the way they were lending or the way they were changing their book more towards retail, isn't that already happening?
No, it is happening, but they've pushed into retail to compensate for their poor quality corporate loan decisions that they have taken. They've not really gone into retail, to look like what is the kind of know your customer guidelines. Do these people, retail individuals have the ability to withstand the slowdown? Now, as the slowdown keeps getting prolonged, the retail segment in the Indian economy cannot be insulated.
Right. Just a word on the markets as a whole as well. Apart from banking and financials, do you think earnings would recover with a low base?
We have been trying to say earnings will recover for many years now. And what all we've seen is at the beginning of the financial, we come with a nice rosy 15 to 20%. And by the end of the year, it whittles down to an absolute flat performance. But despite that, analysts keep rolling forward and again showing 15% earnings growth. So this is the cycle that we've seen for last 3 years, and it has been quite a joke. But nevertheless, you see the market keep going up. So as I say, you have to be a trader in this market. There's money to be made, but not from a fundamental point of view.
Right. Just if you could just tell us about any sectors that are looking interesting to you, which could grow.
See, I've always liked the paint sector. I think with depressed oil prices and if you have branding power in the paints segment, you can do well.
Right. Any other consumption sector? Anything on ACs, cooler business? All the durable businesses have done pretty well.
Yeah, that has done pretty well. But again, I think it has also done a lot of well because of bank financing. So if the bank financing for whatever reason suddenly dries up, then it might not do so well. But again, as I say, I like to see where where some commodity price which is coming down is the input, and you have branding power on the other side on your output, which you can withstand your branding pressure.
Right. Hemindra, thank you so much for taking our time for us. Always good to get a perspective from you.